Welcome back, Peter. How are you, buddy?
Thank you very much. Yeah, no, it's great to hear what you guys have been discussing just now, and getting onto sort of market perception, really. I mean, there's a lot going on at the moment.
All right, well, why don't you share the screen? It's at the bottom.
Yep.
And tell us, with this shortened week, what's top of mind as you come in here to holiday shortened week. Okay, so we can start here.
Well, I just want to first of all make sure that you're seeing the S&P 500. Is that right?
Got it.
Okay, cool. That's good. Well, I mean, we can start with here. I mean, and branch on to the currencies in a moment. I think everything's, as you probably guessed, I mean, everything's all pretty much interconnected.
Yeah, and, all one market. All one market.
It is. You take one position, if you go short precious metals, you're long dollars, and if you're long dollars, basically, you're
short everything.
T-notes.
You're short everything.
Yeah.
Yeah.
And if you're short T-notes, you're short the S&P. So it's you can see this visibly against all the markets, in particular when we take a look at the Elliott wave patterning, because last week when we started to see the dollar still continuing down, it seemed to be moving a long way away from September's high. And even I was thinking, well, we didn't quite stretch to where we wanted it to be in late September. We thought the dollar index might have stretched a little bit more. There's a little bit of a sequence missing, and we thought that that actually, yeah, maybe the dollar's peaked already. But that's changed when we saw Friday's session, and and as you can see on the S&P here, the movement up from pre-CPI. See this swing up here. This is the CPI news when that came.
Yeah, that was a Sigma 7 event, Peter.
A Sigma 7.
Whatever that means. I only know Richter scale.
Yeah, well, it was a big event nonetheless, and of course, since then, you thought that if the market was going to stretch up, it would have done so by now. It's just completely lost momentum, and it's isolated a 3 price swing event up from 3704, which we call a zigzag in Elliott terms, to that 40-50 level. And that zigzag is actually somewhat repeated in what we've looked at in the short-term treasury yields. We'll have a look at that in a short while. But when we piece everything together, what I think we're going to see this week and the week after is the S&P drop another 8%, so we can get down to 36.53. This will basically mean that we complete what we call an expanding flat pattern. It's a correction, in this case a second wave from 39.28. We'll get down here. That should send the dollar up. I think there's a chance that we can break the highs in September marginally. I wouldn't talk about a lot, but I think we could do that. That means the euro will drop down to lower low. It means that 10-year treasury yields will probably sort of uptick by about 60 basis points. So we'll get a high print for the year on that score.
Oh, okay. So we're going to 4.5, Peter?
Looks like it, yeah, about 4.45.
So this little pullback's just an ABC?
Yeah, I mean, I'll show it to you here. I was watching this last week to see what it would look like, but I'm beginning to see that. Can you see this downswing on the bottom right here?
Yeah.
I mean, if we can measure that, because
that's that's Stell's narrative, that we have one more high in yields.
That's right. I mean, if you extend this initial downswing, which was a 5-wave intraday pattern here by 61.8, you can see where it stops the action, and that's not a coincidence. I think that the S&P lost its upside momentum. I think probably what's going to happen here is that this initial zigzag upswing from the early October low is going to extend into a double zigzag. So it means that intermediate wave B will be this double zigzag rather than a single, which I originally thought was enough to finish at 432. But it looks like it's going to have another swing up. That's about 60 basis points. It's about 40 basis points here in Europe in the Bund yields. So there's going to be a slight widening of the spread by about 20 basis points. That's okay. Doesn't matter anything. That's not going to shake anything loose on the 10-10 spreads that we're monitoring. But this upswing, yeah, I think that's going to be where the high is going to be for the year. Then we're going to get this drop later afterwards. I think we're going to then come down. And I think that's probably, that downswing might stretch into the, first couple of months of New Year. And of course, that would be more of a recession talk. sort of scenario then.
Right. Right. Rates coming down, not because of inflation, but economic weakness. And I was talking about it earlier with copper. Copper rallied right back to the $4 breakdown. Couldn't quite get there. Got to about 394.
Yeah.
And the last 4 or 5 days have actually, to me, looked like it negated the breakdown. Are you looking for another retest of the lows here?
Well, I think ultimately we're going to break down here next year.
Oh,
So,
well, I mean, right now,
in the very short term, you mean?
Yeah, what do you think? We hold
Well,
and go to 91 first?
I tend to think that it's probably changed direction already and heading down. But I mean, you could get a short-term flip to the upside, but I don't think it's going to go back to this high. Well,
okay.
This is London Metal Exchange, 8,600 divided by 2204.62. So that high would have been around what, 390? Yeah, is that right?
Yeah, 394. 394.
394. COMEX got to.
Yeah.
Yeah, I don't think we'll go back above 394.
Okay.
I don't think so. I mean, I was hoping it might stretch up a little bit higher because we had targets a little bit higher than this. But
we could get a full-blown retest of 7180. That's a point I'm trying to see if you think that's a possibility.
Yeah, it could range trade. I mean, it could range trade. I'm putting in some shorts at the moment. If we drop down in 3 waves and we don't break these lows, it could flip back up again. Then we just take the positions off and we resell higher up again. But generally speaking, this upswing from July's low is pretty much finishing its first section, and it's going to be very difficult to get above there now. I mean, you can see the news flow coming out of China, you know, sort of the suburb out of Shanghai and lockdowns and stuff like that. Obviously, is being very detrimental for copper. Aluminium looks terrible. I mean, aluminium was a really big base metal last year that was really outperforming, and it's really collapsed. I mean, I know many of you listening in today might not be familiar with things like aluminium prices, but when you take a look at the declines from, you know, this is aluminium going back to March.
Yeah,
I mean, it's come a long way. It's given a lot back of what we saw post-pandemic, you know, and I think it's going to end up down here, a very deep correction. So the base metals are turning more bearish at the moment, more immediately bearish, and you know, we're basically shorting those. But as it turns out, really the dollar is going to be the linchpin of everything. So when we take a look at the dollar index, I'm tending to think that, yeah, we can scratch out a little bit of a higher high, just to augment the completion of 5 waves from this late May low, 1, 2, 3, 4, 5, and this particular sort of sequencing up from late May. For those of you who are a bit familiar with Elliott wave, this is an ending diagonal, and the impulse waves 1, 3, and 5. First of all, first thing is that waves 1 and 4 have to overlap. That's a prerequisite for an ending diagonal, or a diagonal of any sort, actually. And then the subdivisions in an ending diagonal, the impulse wave should be zigzags or multiples. When I say multiples, I mean doubles or triples. So this needs to move up. You can see there's 3 price swings there, 3 in there for wave 3. This would need to be duplicated in wave 5. And yeah, looking at the way.
Can we do that by the Fed meeting?
No, I think it's going to
Mid-December?
take, I think, well, second, when is this Fed? 2nd or 3rd, isn't it?
I thought they were mid-December.
Oh, I think it's earlier, isn't it?
Oh, okay. All right.
Well, maybe I'm mistaken. Maybe we should check that. Well, yeah. I mean, if it's
into the end of the year, it looks.
If it's mid-December, this is already going to get up there, isn't it? I mean, so, well, it's going to. Yeah. I mean, if we do go up to that point, depending on when we do finish it, aligned to the Fed meeting. I mean, if the Fed is mid-December, this should be up there already by then, I would have said.
Okay.
You know, we should be already trading up there by then.
They could get a good start. Yeah, go ahead.
Well, sorry, I was just going to say, in which case then you would, you know, you'd expect the Fed to, you know, to come out. It would be sort of a bit of a change of direction sort of idea then, because I think the yields by that time would be at least up to that 445 number, and then we could start trending down from there.
Okay. Okay. Any You don't think the pound's going to make a new low, though, do you?
No, I don't. I mean, I think that when we looked at sterling dollar, I mean, the longer term count, it really did look like an exhaustion sell-off down here when we had that sort of failed budget and everything. And then the bigger picture, this entire downswing, we go back to this high in May 21. That downswing is the fifth wave of an ending diagonal here. You can see it. 1, 2, 3, 4, 5. And, all of these declines, are fitting into this wedge shape. And certainly looking at the measurements, I mean, we can, for example, extend here, first wave, by 61.8. And that's a common ratio that we can use specific to this particular diagonal. And it's pretty much gone into that as an exhaustion sell-off and straight back up. So I don't think that generally we're going to be looking at any pullback. We can see a pullback for sure.
But not 103 again.
No, I don't think we'll break that low. I think we could come back to about 107.5. I think last week I drew this chart as a sort of secondary count, but I think this is correct. I think we're going to go down to about 107, 107.50.
Okay.
We're going to pull back down there, but that's consistent with the dollar index going up to 106 plus.
And you have the same. You have a line in the sand for the dollar around 104, right? In case these things don't play out, we take out 104, and that's a problem. That I have that line goes back to the COVID high and everything.
Yeah, it's pretty close actually. It came pretty close last week, didn't it? It came here. This is it here, about 104.60. Okay. Yeah, it needs to hold that if we're going to really sort of kick on.
Okay, so when I called you to have you come on, we're talking. You're saying you're trying to figure out the dollar and silver, and you popped up a chart to show me of the gold silver ratio, and it was a longer term chart, and you said it was corrective, and so then I sent you my look on the daily, which is a falling wedge, and we started talking about that because you saw the gold silver ratio as a recent drop as being corrective.
Well, no, this decline is starting a new impulse downtrend. Your sort of wedge shape was like this, wasn't it?
Okay, yeah, but you don't get wedges at highs. The ending diagonals happen at lows and highs, not after a move, right?
Well, I mean, a diagonal can be a leading diagonal. This could be a new first trade. But the only difference between the boundary lines that you've drawn is that in order for this to be a leading diagonal 5-wave drop as part of a new downtrend, for example, you'd have to draw it from the actual high, 96.55, and not from this lower high here. Okay. Because when you sort of match up a diagonal, it would drop like this. You would come down, rally, drop down like this, rally, and drop down. So you get this sort of wedge shape. And this would be 1, 2, 3, 4, 5. You see here, we have to start counting from the top, not here. So technically, it looks like a wedge, but from an Elliott perspective, you would have to start counting it from up there. So it's a bit tricky. What I think is probably going on here in the short term, at least, is that I think we've had 5 waves down here, and we've got A and B of an expanding flat. This is going to pop up to about 93.5, 94. Okay. Something like up here, and then it's going to collapse afterwards again and resume this downtrend. Okay. But the main reason for that is because this entire pattern up actually is part of an expanding flat that begins here. A up, primary wave A, B down, 3 waves, and then we have 5 up, and this expanding flat actually coincides with silver's decline from the August 20 high, when it was nearly $30. And since then, silver's dropped down in an expanding flat. And the only difference between this inverted to silver is the fact that the C wave has unfolded into a 5-wave expanding impulse, where you get the 3rd wave noticeably bigger than the 1st or the 5th wave. So this is an expanding impulse. Whereas if you take a look at silver and the decline in silver prices, the entire downswing for the diagonal part, this C wave decline, is a diagonal. It's not an expanding impulse, it's a diagonal impulse. So you get 1, 2, 3, 4, 5. And this is a very different sort of formation, but they're in sync, you see. So you get slightly different variation in pattern, but the movements up and down, in this case inverted, are very much in play. So
Okay.
if I'm right and the dollar goes up to 116 plus, and then we get a pullback for sterling dollar down to 107, 7.5, this will drop down to $17, maybe 16.80, and then of course that means that the silver ratio will widen out a slight bit, but not dramatically high.
Could silver make a new low and gold put in a higher low under those circumstances?
It could be. It could be. I tend to think that gold might also break down. You see, silver, if it trades down to 1680, and we have, what did I say? The gold silver ratio out to 93.5, right?
Right.
So we've got 16.8 times 90, let's say 94. Gold would be 1580.
Okay.
So in fact, gold, if we got down to 1580, would comply with getting down to, I've got a current target basis Elliott wave, not basis those calculations, but basis Elliott wave at 1595, just $15 away.
Okay.
Which seems to match up. So it means that, yeah, gold would still trade down slightly to a lower low, but we're not talking about much really. And in fact, you know, you and I, we discussed some of the gold miners, didn't we? And
well, you said the miners look good, and yeah, I said Newmont put in a pretty good month. Well, the month's not over, but it's like a key reversal month. So
yeah, I mean, all of those look pretty good, and they've been bashed down a lot, as you can see. This is
yeah.
Newmont Mining.
Yeah.
And I mean, this is a huge expanding flat pattern. You've got wave A down here, sorry, down to this point. And then we got B up, which breaks the previous highs, and then suddenly a collapse down in 5 waves. And, you know, if you're looking at this without understanding that an expanding flat pattern began from here, and you just looked at this 5-wave decline, you might think, oh, 3-wave rally, and then that's indicating a downtrend and we're going down. No, we're not. A 5-wave pattern is, of course, the last sequence of an expanding flat pattern. It's a correction, and it began from, again, you know, you have to look at the symmetry here. August 20, that's exactly when gold and silver topped out at the same time. And so, whereas you've got an expanding flat for silver, gold's well, in fact, gold's expanding flat pattern too. They've all been expanding flat patterns. If you go to gold and look at the entire movement down, you can also see an expanding flat here. This is August 20 again. A down, B up, and C down. This 5-wave decline. So
just enough to shake out all the bulls. And the silver bulls, if that happens, they're not going to want to hear about a short squeeze in silver ever again, because it's been like the 3rd disappointment off a low where it's, oh, this is it. No, that's not it. Oh, this is it. No, that's not it. I think they're going to be pretty discouraged down there. And you probably back up the truck if that happens.
Yeah, that's right. I mean, you want to load up if you get down there.
Do you think it's possible? I'm sorry.
Go ahead, Dale.
That gold makes a new low and the miners don't. That would be a pretty important message.
Yeah, I think it's safe to assume that, actually. I think that yeah, just going back to that Newmont Mining chart, I don't think that you can see that it's already bottomed at 37.45.
Yeah.
So I mean, when we drew this a few days ago, it was just before the. I mean, it's exponentially gone up since then, and you know, it could do with if bullion's going to drop down, you know, this will drop down probably like in a 2nd wave correction, but it won't break the lows anymore. I don't think so, because I think if it wanted to have done that, it would have done it already. The only way it could do that is if wave 4 was repositioned here as an expanding flat pattern. But even on that basis, you know, generally, if we're trading equities like this, you're not overly marginalized, are you? I mean, you're not putting up margin to trade this. You're normally putting, you know, you're not getting leverage, in other words. Whereas if you're trading gold futures or gold silver futures, you might be inclined to be leveraging your position a bit too much. And if there is a risk of a decline like that, you could get burnt. So from this perspective, when you look at the long term, what we're looking at the very long term, we're going up to 211 or something like that for Newmont Mining. You really got to say, well, I'm a buyer down here. Thank you very much. This is a nice trade. We've had a good swing down to finish this correction. And, this has got to be, if you're trading equities at all, this has got to be part of your portfolio because it's going to be one of the outperformers, You're not going to be seeing sort of like 2 or 3 times multiples, or more in stock markets.
What's your bet? Yeah, that's over.
That's gone. Yeah. I mean, there will be some opportunities in maybe trying to trade some Chinese stocks and Alibaba and some tech stocks. You've got to be very specific, but you wouldn't be looking at, the major indices are not going to be, tripling or quadrupling between now and the top of the 94-year cycle in stock markets. No, that's not going to happen. So these present great opportunities, really.
Yeah. When do you think, just guesstimate on time-wise, when we could be at wave 5, 2025, 2024?
In the stock market or on these miners?
This chart.
On this chart. Well, I mean, there's a good point because I think that to some extent, this next big push up is going to be fueled by a weakening dollar.
Okay.
And going back to some 15.6-year cycles that we've had on the dollar index, we had initially, when we married up the peaks, the previous peaks going back to the 1970s, we found that this particular cycle would bottom in 2024. But if we phase variance the shift a little bit in the cycle, and I discussed this in my mid-year video for commodities part 3. If we phase variance it, the dollar, according to the lows, the cycle lows, and match them up more precisely to the same cycle, really 15.6 years, 16 years, that could push out 3 years to 2027. So we've got these 2 time phases, and looking at it now, of course, you'd have to say, well, it's going to be 2027 because we've only got sort of a year and a half before we start to nudge into 2024. So my guess at the moment, looking at those 2 ways in which we applied those cycles, is that 2027 would be a peak.
Okay. All right. Really appreciate it. Best place for people to follow you, Peter? And
great. Yeah, thanks. Well, I mean, let's take a look. The best way to catch up with some of we publish a report twice a week. Most of the material that we're talking about today, we publish and we put in there. And if you go to wavetrack.com, this is our main website. And then if you go to subscriptions, and you can just mouse over subscription here, and you can subscribe to the Elliott Wave Compass report. And it's about $39 a month. You get 2 reports a week. And you can also log into the database that we have, so you can view it online as well. So if you don't want to download a PDF report and you just want to go online, if you're traveling around using your handheld device, you can just take a look at everything there and read the report from that point. So that's a great way to follow everything that we've been talking about today.
Okay. Peter, great and very interesting narrative that you have, and timely with the juncture we're at in a few of these different markets. So I thank you for stepping up and being the best pinch hitter any baseball team would want. All right.
That's really a new one for me. I'll give it a go.
You hit that hanging curveball that I threw you today. So really, thank you, Peter.
Great, Dale. Thanks a lot. Thanks for inviting me. Thanks, guys, to everybody listening in. Hope you do well in the next phase of trading.
Happy Thanksgiving, Peter, even though you don't celebrate it there. So have a great holiday, and really very interesting looks that you shared with us today.
No, great. Yeah, Thanksgiving. Happy Thanksgiving to you guys too, and enjoy the holiday on Thursday. Yeah.
Yeah. Richard wants your Twitter handle.
Twitter. Oh, yes. I'm just going to check it. Okay. Sorry about that.
There it is. WaveTrack Twitter. There it is.
Okay, so our
At
Twitter
Elliott
handle is,
Wave. Yeah.
where is it?
It's right there at Elliott Wave _ WTI. You got it, Bran?
That's it there. Sorry, yeah. Thanks for
Okay.
Thanks for the help.
All right, buddy. What are friends for? All
Super.
right, Peter. Good hunting.
Okay, guys. Look, thanks very much. All the best to you.
Talk to you soon.
Adios.
All right, Peter Goodburn, everybody. Could join the team in 17 minutes on the morning edge. Good hunting today. Don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.